Tell us a little bit about yourself, if you don't mind, and your association with Stockyards Bank, and we'll go from there if that's all right.
Yeah, I'd love to. Again, appreciate you having me on. This is an awesome opportunity for us to get out there and educate a little bit, especially on the tail end of 2020. We're running right into 2021, not missing a beat. I think it's a great opportunity to talk about the opportunities that you have, specifically when you're talking about your relationship with your bank or your banker. So I started at this particular bank 12 years ago. Started in our loan operations group, preparing loan documents and doing all that trench work, if you will. Worked my way up through a couple of different areas, hit business banking, commercial lending, private banking, and then found my way out in our retail division here, running an area around my part of town, helping the small businesses. I've been doing this for a couple of years now, and it's been the best opportunity out of all the opportunities I've had in the bank, because I've really got an opportunity to sit down and get to know the people and what really makes the machine work, because the small businesses, as we know, are the cogs in the machine. I don't have the grit. As much as I want to, I don't have the grit to get out there and run my small business. And I've got lots of opportunities and ideas. So I have to live vicariously through you all. That's a little bit about my background. I do the small business development and lending. I handle everything from the checking accounts to the loans, random questions, unprecedented PPP type of actions, which we'll talk about, I'm sure, here a little later in the show. And I kind of act as the quarterback. We offer a host of different things, as most of the banks do, including treasury services, mortgage services, credit cards, lines of credit, checking accounts. And I'm the quarterback. So it's good to have that quarterback, because without that quarterback, it can be exponentially more difficult and intimidating.
Right. One thing with Stockyards Bank in particular with me, and I've said this more than one time here on Turfs Up Radio, about how much I appreciate the way Stockyards has helped me. And actually going back probably 30 years, and I think I shared this story with you at one point, Ben, if it hadn't been for Stockyards Bank and a smaller institution, I'd have been one of the statistics of this industry, because I never will forget Mr. Schoen. It kind of took me under his wing a little bit, and he said, Wayne, he says, we'll help you. We'll help you. And he was the first person that was really willing to help me in, Stockyards, knowing that I was in the lawn and landscape business, and I didn't have the best setup. I wouldn't, and I like to throw myself under the bus first here with all my listeners, Ben, because I wasn't running a business, if that makes sense. I had a business, but I wasn't running it as a business. And quite honestly, my first experience with going to try to borrow money with a bank, and I don't think I shared this story with you, but I might have.
No, I haven't heard this.
I haven't shared. This goes back to like 1985, I think, 1985, 84. And quite a few of our listeners probably weren't even born at that point. But I never will forget walking into one of your competitors' banks, and I wanted a 36-inch lawnmower. And at the time, I think it was about $3,000 is what the cost of the equipment was. And this lending institution just happened to be right down the street from Sullivan College, where I worked in their financial aid office. And so I go in there to see the manager, and I said, hey, I introduced myself, and I was professionally dressed for a lawn guy, and I say that with all due respect. I did not go down there in my suit and tie job clothes, because I wanted to look like a lawn guy, So I'm in a polo shirt, my blue jeans, and I told him what I wanted to do and how much money I wanted, and he's like, all right, we need this, this, and this. And I get the financials. I mean, we didn't have a whole lot of financials because we weren't doing that much. So I did have at that point, we did have a CPA. So we did have access to some numbers that they were interested in. But at the end of the day, what it came down to, and I'll just call him Mike. I don't even remember the guy's name. But Mike says, this is all good, Wayne. He says, but we'll need your home as collateral.
Mm-hmm.
And I'm like, my home on a $3,000 mower? And he said, yeah. He says, you guys don't have the best, and I can't remember exactly how he said it, but basically, you guys don't have the best history in business, and we don't have any need for a lawnmower, but we do need to have a guarantee that we're going to get our money back. And I said, Mike, I'll tell you what, buddy. I said, that's okay. I said, don't worry about it, but you're not going to get my house for a 36-inch lawnmower. But I'll tell you what I'm not going to do. He said, what's that? I said, Sullivan College right down the street from me? I said, I'm the assistant financial aid director down there. I said, that's second in charge. I said, you know what? I send thousands of students down here with student loans, and guess what they're not going to do? He said, well, wait a minute. We can talk about this. I said, no, your discussion's over. So I'm not proud of that moment, but I am proud of that moment because he stereotyped me. I had a full-time job. My wife had a full-time job. And he stereotyped me and wanted my house as a guarantee on a $3,000 loan. So I was good. I went somewhere else, got the money. Wasn't any questions asked other than documentation-wise, and I got that. But, they didn't ask for my house. But guess what didn't go down the street to their bank? None of our students went down there with student loans. That those origination fees seemed to worked out pretty good for them for a long time. But anyway,
oh yeah.
So, anyways, that's my experience with, and that kind of put a bad taste in my mouth with banks. And then I was lucky enough to run into you guys, and I say that sincerity. So I share that story with you, and I share that story with our listeners. That it's about a relationship. I think that we need to have with a lending institution. What's your opinion on that, Ben?
You absolutely nailed it. You absolutely nailed it. You're going to run when you're looking at a bank. Let's just compartmentalize them into two categories: small banks and big banks. When you're looking at the big banks type stuff, they've got a lot going on. They got big resources. They have snazzy software, intuitive features, bells and whistles. But what they probably don't have, especially for some of the smaller businesses, is a personal touch. They have their sights set on bigger things, bigger fish to fry.
Right.
Smaller banks, specifically stockyards. And the reason why I'm still in banking 12 years later is because of stockyards. They have their sights set on building relationships, growing organically, getting to know the community, being there, developing a relationship, and then see what business grows and results as a result of that relationship. The smaller institutions will know the individual markets better. Like stockyards, for example, I know the decision makers personally, and I've built a rapport with them. Stockyards is unique in the sense that the lenders at Stockyards Bank don't just collect information, financial information, sniff out a deal, and then throw it off to somebody over in Georgia to underwrite it. I personally sit down and delve into every single number on every single financial statement, and then work very hard sometimes back and forth with the borrowers and the underwriters to get a deal done that is a good deal and not irresponsible, that needs to get done. So knowing those decision makers personally is one of those huge, huge assets when you're dealing with some of the smaller institutions.
Yeah.
I'm Facebook friends with my underwriter. He trusts me. He knows me. I know him. We golf together. Like that stuff is how you can make loans happen.
Right.
Plus, smaller institutions are just nimble. We can just be more nimble than some of the big guys and gals.
I know when I was first introduced to Stockyards with Mr. Schoen, and then I went to Mike Goody, and
yep.
And it's I guess I've been in business too long. I don't know. This is our 42nd year, but I've been passed off from Mr. Schoen to Mike Goody to Joan, now to you. And but the thing is, what I appreciate about Stockyards so much, and I think this is what we all have to look for in our market, regardless of where we are, is the fact that before that transition ever took place, you guys, the previous manager always brought the new person to see us and introduce us.
Yep.
And, I think that goes a long way to showing how somebody cares. I mean, of course they want the business. I mean, our industry, a lot of times guys' mindset starts clicking and they're like, well, yeah, they do that because they want the interest on the loans and they want your business and blah, blah, blah. Absolutely, they want our business. But there's a lot of institutions, and I dealt with a couple of them in the past, that they wanted your business, but they didn't care. And I honestly think it's important that we all find an institution like I've been lucky enough to find in Stockyards, somebody that, you care about your customers, and it's not just about wanting our business. And I think of course, that's why we're all in businesses, for business. But hey, when you act like you care a little bit, I think that goes a long way to helping build that relationship, with somebody. So getting on to that point, you want to touch on the PPP program a little bit, because I know that'll be rolling out here soon, the new one, and want to talk to our listeners a little bit about that. Do you mind?
Love to. So for any of those folks who have secured funds through round one, you are now getting into the forgiveness component. Loans under $150,000. Again, these are round one loans. There is a new application coming out somewhere around the 20th, 21st. I've heard even the 24th of this month. That's going to drastically change, in a good way, the scope and procedures for forgiveness. It's going to be a much easier process for everybody involved. So just sit tight there. Round two, there's an application out. Round two, I'll just hit on some high level stuff for those folks that are interested. Round two money, they're capped at $2 million versus $10 million loans now. You cannot have any more than 300 employees. And the biggie is you have to demonstrate a loss of 25% or more in your gross annual revenue from one quarter of 2020 comparatively to 19.
Now, how would a guy, let me ask you this, Ben, and not to interrupt you, but that brings up a quick question for a lot of smaller companies, okay? What type of documentation do they have to back up that? Is that simply a bank statement, or how do they say, okay, well, here's the quarter that I was down at least 25%. What type of documentation is required?
So typically we would look for some sort of an interim financial statement. A lot of the smaller businesses might not have a CPA that works with them on a monthly basis, and that's fine. One alternative is to use your 2020 year-end comparatively to 2019 year-end gross annual revenue. If there's any folks out there who are filing on their Schedule C, so if you have a single member LLC that's filed on your personal Schedule C, you're just going to take the very top line, your gross receipt number from that Schedule C in that particular instance, and you're going to take the annual number for 2020. If it is 25% or greater, or 25% or more less than 2019, you're eligible for the program.
I see.
So that is a second. Typically, we're going to default to one quarter. Okay. Because you may be one quarter down and the other 3 quarters are up. But for those smaller businesses, the SBA did give a little leeway and said that we can use an annualized number.
So a larger company.
Can you show those with?
Go ahead. I'm sorry.
Go ahead.
I was going to say, so a larger company then that does have the financials to back up, let's just say somebody had they didn't qualify for 3 quarters, but 1 quarter was off, where they've got that documentation where, hey, here's that quarter, and, hey, we were down 28% or whatever the percentage is, something greater than 25, then they're okay, even though their annual gross may have been better in 2020 than 2019. Absolutely. Just have to demonstrate for 1 quarter. Okay.
It's going to work the same. The loan amount is going to be 2.5 times your average monthly payroll for 2019. You can use 2020 payroll numbers, but that requires new calculations, new documentation, and most folks are going to have a higher average monthly payroll in 19 than they did in 20 if you're going to qualify for the program. So if you got round one funding, round two is pretty simple. And then there is the possibility of getting a PPP loan if you did not get one in round one, because another qualification for round two is to have received funding in round one. But you can still actually go back and seek round one funding if you did not get a loan yet. There is some money still available, and that program is still active, or it's
I see.
reactivated.
I didn't realize that.
Yeah.
So somebody that qualified, if they didn't file for round one, they would have to qualify for round one to get into the second round.
That is correct. Yeah.
I got you.